Two things will move the market this week. We have the geopolitical environment. Israel and Iran, they ended the week. Israel attacking Iran, Iran attacking Israel. And what is going to happen this week? Will Israel go deeper into Iran? What will the U.S. involvement be in this Middle East conflict? Well, we know that the U.S. will be involved, but what will be the level of commitment from President Trump and the United States? That will weigh heavily on where interest rates go in the market this week. Also, economically, we have the Fed meeting on Wednesday. The Fed decision on Wednesday is going to move the market regardless of what happens geopolitically, but expect both to weigh heavily on where the market goes, stock market, bond market, and therefore interest rates. Otherwise, what we have going on this week, we do have a lot going on. On Monday, we have a 20-year bond auction. On Tuesday, the Bank of Japan is going to make their Fed rate equivalent decision on interest rates. They have actually lowered their Fed funds equivalent rates a couple times now. We also have a retail sales report. Consumers like you and me, are we spending less money? Are we concerned with our level of debt? It seems the country doesn't really care. Actually, that's not true. That's what's going on in Congress right now, actually in the Senate with the budget. Wednesday, we have the initial jobless claims and continuous jobless claims because Thursday is a holiday. We're celebrating Juneteenth and the bond market will be closed on Thursday. Bank of England doesn't care though. Bank of England will actually be making their Fed funds rate decision the day after our Fed does. They do it on Thursday. And then on Friday, we have a manufacturing survey. So big week for markets economically. Let's take a look and see where rates are. After a great start to the week last week, we saw on Friday interest rates go up. Conventional, we are still hovering just below 7%. And VA, we got down to 6.4, maybe even 6.35, 6.37. But now we are at 6.47, so we're near that 6.5. Don't expect really a lot of movement down unless the Fed lowers the Fed funds rate. Then we can see a positive reaction for the bond market. We can expect interest rates to go down. Again, that is hope. Hope is not a course of action. We need action from the Fed. They need to cut the Fed funds rate this week. Will they? Hey, who knows? They're probably not watching my YouTube video here, but they should, because you know what? It matters to them and the regular Janes and Joes are doing right now. We are struggling. Certainly, the housing market is, we talk about the U.S. being in a recession or maybe being in a recession coming up. The housing market's already in a recession. So we actually need some help from the Fed. The president's been asking for this. He's been, I don't want to say he's been begging, he's been demanding the Fed lower the Fed funds rate, and everyone else is starting to chime in now. Will the Fed act? We'll find out on Wednesday. All right, have a great week. We'll talk to you later. Aloha.